G'day folks, welcome back to another update for natural gas and its ETFs. It's pulling back to that support level and it really loves gravitating towards that support level. We'll go through the technicals in a second. First, looking at the outlook. For the natural gas demand, the rapid expansion of AI-driven data centers is significantly increasing electricity consumption, with projections indicating 160% rise by 2030. This surge is expected to elevate natural gas demand by up to 3 billion cubic feet per day to meet the growing power needs. Excuse me. For the ETFs, ProShares Ultra Bloomberg Natural Gas (BOIL) aims to deliver twice the daily performance of the Bloomberg Natural Gas Sub-Index. As of January 25, BOIL is trading at 65.54, reflecting a slight decrease of 1.5% from the previous close. ProShares Ultra Short Bloomberg Natural Gas (KOLD) seeks to provide twice the inverse daily performance of the same index. Currently, KOLD is priced at 32.68, marking a 1.68% increase from its previous close. The United States Natural Gas Fund, UNG, tracks the daily price movement on natural gas delivered at the Henry Hub. As of the latest data, UNG stands at 18.12, experiencing a 0.8% decline from the previous close. In terms of the AI applications, the proliferation of AI applications necessitates substantial computational power, leading to a significant increase in data center energy consumption. Estimates suggest that by 2030, data centers could account for up to 13% of the US power grid's output, with a considerable portion of this demand being met by natural gas-fired power plants. So as always, look at the long-term trends and get an idea of where it's heading. So on the monthly, the price is broken above its moving averages here. Likewise, the CCI 150 also very strongly performing above its moving averages. Now for these moving averages, for those new to the channel, we've got those in the description below to learn how to draw them on your charting software. So bullish movement on the monthly. On the weekly, again, nice strong bullish move on both the price and the CCI. And on the daily, if I zoom into this one, you can see there it's finally broken below that moving average on the CCI, giving us a bearish outlook. The price, and it's been fluctuating above and below that CCI moving average, so that's just a bit of a consolidation, if you like, on the commodity channel index. But notice the price has been sticking to this diagonal ascending trend line. Now you can see there it's right on that trend line, closing there, last day of trade. So if it does, and I've said previously, if it does break below this, then the next level of support will be this minor horizontal support at 32.16, and below that we've got this descending diagonal trend line. So we'll take it one day at a time. Now to look in the micro view, if you're looking at if you're trading on the smaller time frames, and here I've got the 1 hour time frame, you can see there again it's just above and below that diagonal trend line there. We only take short trades if you're trading on the 1 hour or any other time frame you choose on the intraday. So you would have gone short from around the 19th of January, and that would have equated to around this area back here. You would have gone short when it broke below the CCI on the 1 hour, but also below the price moving averages, and you would have closed it out when that CCI broke into that moving average range. So that would have given you a nice little gain there. If I drew a measurement tool down to when it closed below on the CCI, that would have been on that candle back there. That would have been a 7.39% gain in 22 hours of trade. Avoid going long. There was a bit of consolidation happening here. You would have taken the short entry there, a very tight stop loss there. Another short entry would have been taken on that when it broke below the CCI there, which would have been that candle, and you would have closed it out when the CCI broke into the moving average range on that candle there. So again, a 1.5% gain in 9 hours of trade. Avoid the consolidation there. There was a couple of false breaks. Avoid going long. Avoid going short because that hasn't broken below the price, even though the CCI has. Until that point there, you would have gone short there, and that would have been it basically stuck on that moving average range there. So you might have taken a stop loss there possibly, or if you held on to it, waiting for a break above, you could have gone short again and then close it out again when it closed there. That would have been pretty much a break even or a small loss on that trade there, so nothing to gain out of that trade there. So again, we always look at the smaller micro time frame to get an idea of where the chart's going. So at the moment, bearish move on the daily, and we only take short trades. So that, again, there's no just trying to see, there's no divergence to talk of. There was a bullish divergence here, but again, we don't go long because we only trade in direction of the higher time frame. And you would have taken a long trade potentially if this was going long, because there was a bullish divergence back here. You can see there higher lows on the CCI versus lower lows on the price. But again, don't go long because we're still in a bearish move on the daily. These micro moves can be taken advantage of, but again, with a bullish divergence, like in this case, you would have taken a Fibonacci back to that level, and the minimum retrace would have been around a 23-38% level. This one went well beyond 100% level, so they're pretty rare. Just be careful of that going that. I like to take a probability where we only take trades in the direction of the higher time frame. So for BOIL, there are no CCI indicators for it on the monthly. On the monthly price chart, you can see it's very strongly bearish. However, on the weekly, we've got a very strong bullish divergence here versus lower lows on the price. And as I keep saying, what I'd like to see is break a lot higher with the moving averages widening a lot more to be more bullish. But at the moment, if you're trading on the daily, you could have taken some long trades during this period here when the CCI and the daily and the CCI and the price movements on the weekly were bullish. So for example, back here, you would have seen here as well, we had a couple of bullish divergence versus lower lows on the price, and each of those broke above. Now, you would have, again, in alignment with the weekly, you would have taken these long trades. So that one there would have gone long on that candle. If I drew a measurement tool on that candle there, and you would have exited when on the close of that candle there, when that CCI breaks into that moving average range, that would have given you a 16% gain in 10 days of trade. Avoid going short because we're going long on the weekly, and you would have taken another entry there on the daily, and that closed out at that point there on that close of that candle. So 8% gain in 14 days of trade. Go long again when the CCI breaks above, the price is already above, so you would have gone long there, and you would have closed it out when that CCI touched that moving average range on that level there. A 9.7 gain in 7 days of trade. And at the moment, you could have taken a long entry there, but you would have been stopped out on this one because the CCI is already broken down. So avoid going long until we see that break higher on the daily. If you go to the intraday charts, again, going long direction of the daily only, you would have taken these little long trades. I won't mark them all, but you can see there a couple of these would have been a false break there. That would have been a nice gain to take on that entry there with a break above there, and you close it out when it closed in there on that candle up there. Again, as I said, that would have been a small stop loss. That would have been a nice little trade to take. Close of that candle, and you close out the position at the top there. So that would have been another nice little gain. Probably a break even or a small loss there, and another break even or a small loss there. But at the moment, there's a bit of a divergence, a bearish divergence here on the hourly versus, you can see there, lower highs on the CCI versus higher highs on the price after hitting that resistance at 80.01, and that's starting to pull back already in alignment with this ascending trend line there, and the CCI is still dropping. So bearish movement at the moment on the 1 hour time frame. So for KOLD on the monthly, it's already broken below that moving average range, giving us a bearish view. There's no CCI for it, but bearish movement on the price on the monthly. On the weekly, very strong bearish move on the weekly chart with the CCI and the price broken below the respective moving averages. And again, there's no divergence to talk of on either of those on the monthly and the weekly. And on the daily, again, no divergence, but you'll notice it's bounced off this support at 27.80, making some move to the upside. The CCI has moved into that moving average range. The price is still below the moving averages. Again, just cautiously wait for this to go long. I'd wait for this to break above the CCI and the daily, the CCI and the price moving averages to go bullish. But at the moment, it's in a neutral positioning, so avoid going long or short. If you look at the intraday charts, so again, cautiously, I wouldn't be going long or short on the 1 hour. I'd like to see this confirm one way or the other on the daily. But at the moment, you'll notice here as well, we had a bullish divergence, higher lows on the CCI versus lower lows on the price. Hasn't actually quite hit our minimum target range. Again, for those new to the channel, the minimum range we'll look at is the 23-38% level, and more than 90% of the time it hits this range. The CCI is still rising, so we may well hit that in the coming hours of trade, and it can actually break higher than that, or potentially bounce back down and continue its bearish decline possibly. But again, in the short term, I'd say this would be hitting this minimum range. I don't trade these divergences, so be very careful. Sometimes it just touches it and then it retreats back down towards its original trajectory. So for UNG on the monthly, it's still below its moving averages on the price chart, but it's broken above the moving averages, a very narrow moving average on the CCI. So I would call that a somewhat neutral to slightly bullish move on the monthly. On the weekly, we did have a long-term bullish divergence, and that's still in play versus lower lows on the price. Now you'll notice the CCI is still rising above its moving averages, and so is the price. Again, I'd like to see us break those previous highs, but you could take long trades on the daily based on this weekly bullish movement. And on the daily, again, you got a couple of trades here. You would have gone long on that candle. I'll just draw some measurements here on the daily, and you would have closed it out. That would have been a break even on that one. Not a good trade on that. On this trade, I'm not drawing it there, I'm drawing it here. On that one, the CCI is broken above the moving average, so is the price, and we close it out. We don't close it there, it's actually skimmed off that moving average range. It keeps going, and it's actually broken into the moving average there, so you would have closed it out on the close of that day. That was a 7% gain in 15 days trade. That was a false break, small loss on that one. And this one you would have entered long again on that one, and you would have closed it out the close of that candle there. So just 3.5% gain in 7 days of trade. A small false break there, you probably would have got a stop loss on that one as well, and currently you're in the neutral stage on the daily, so avoid going long or short on the intraday, same as KOLD. If we go to the intraday chart, now we did have this bearish divergence here versus higher highs on the price. It's actually come down and hit our target range, bounced out of that. That's why I don't trade these, because often it just does hit this range and bounces out of it. In this case, it's continuing sideways, consolidating. The CCI is still dropping. It's currently in this neutral range. I wouldn't be going long or short on the intraday. I'd like to see this break above that moving average range to be more bullish, or alternatively wait for it to break below to continue to a downtrend. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.